Joining us now to discuss the executive shakeup is Corey Tarlowe. He covers discount and specialty retail at Jefferies. Corey, thank you so much for being here. What did you think when you saw this announcement this morning?
Thank you so much for having me, Courtney. Delighted to be here. So I view Doug's tenure at Walmart as CEO as an investment phase. Because we all remember that day in October of 2015.
Very clearly.
When he announced we're going to invest in our associates, we're going to invest in our stores and invest in our supply chain. And the stock took a big hit. But then the fruits of those labors, years later, are now being felt. And he's leaving just at the precipice of, or the culmination of, all of this investment. And so now the onus is shifting to John Furner, who is in this phase of innovating and accelerating. And I think the next phase is really going to be about how does Walmart leverage the groundwork laid by Doug McMillon to then harvest all of those benefits and drive more profitable growth ahead.
Yeah, really good point. And I remember like Jet.com buying that for $3.3 billion. A lot of people scratched their heads. Other people said, well, if you get Mark Lowry with it, I mean, that's quite a powerful acqui-hire. And he stayed for some time and really did help try and build out a lot of things at Walmart.com and using the stores and online. Not everything worked, to be fair, but the big stuff seemed to have taken hold. Are you worried about Walmart's ability to continue to grow same-store sales? What have they had, 39 straight quarters of same-store sales growth? And if you're looking at a revenue base of $700+ billion, how do you keep growing?
It's a great question. Right now, in the data that we look at on a regular basis, we've seen Walmart's traffic up low single digits. And if you combine that with inflation, i.e. tariff-induced inflation, you're looking at same-store sales growth, at least in the quarter they're going to report next week, of like 4 to 5%. We're at 4.5%. The street's at 4%. The bulls are probably close to 5 even. And I think that sets up a very conducive story to continued sales growth. It's really driven by top-of-funnel market share gains at the end of the day for me, because the traffic is what's really leading the way. And a lot of that traffic is coming from higher-income consumers.
But going for the grocery, which is lower-margin business.
They're coming into the stores, but then they're also shopping online. And they're coming in for the grocery for that great value, but then what they're staying for is the convenience. And I think that's the remarkable shift that's changed under Doug and John, is that everybody loved Walmart for low prices, but it wasn't always the most convenient option. And now with buy online, pick up in store, buy online, ship from store, drone delivery.
In-home delivery. They'll put it right in your refrigerator.
Yes, exactly. And they'll be able to deliver to 95% of the U.S. in under 3 hours by the end of this year. And that is what's going to contribute to share gains for Walmart against retailers like even Costco or Amazon or Target. It's going to put Walmart in a much different position than they were 10 years ago when Doug first took the helm. So
you open the door to other retailers. It's a big earnings week next week, and then a big week after that with Black Friday and Cyber Monday. You and I are going to be very busy. You upgraded by a Gap to buy today, which I'd love to talk about because they're reporting next week. But you also have 41 buys or overweights and only one hold and one sell. So you're bullish on retail almost across the board?
That might be our Jefferies retail team in total. I only cover about 30 stocks in total.
Okay, so you plus others,
Yes.
But generally, you feel optimistic about the consumer?
Yes, for sure. I think that the reality is that there's what people say and then there's what people do.
Sure.
And what we've seen is that the credit card data that we look at, the foot traffic data, all seems to point to a really strong holiday. Albeit, though, we are seeing some areas where there's some squishiness, right? People are trading down. I think Amex had some comments that they reported last week, and they're obviously super prime consumers, where spending was resilient. And these higher income consumers do tend to drive a lot of the spending for a lot of American households. Now, the kicker is what happens with SNAP and the lower income consumer, because as of November 1st, we've seen a little bit of shakiness in that data.
Absolutely.
And so do these customers then become even more reliant on retailers like Walmart or BJ's Wholesale Club as examples, which might cater to more of a food-oriented purchase?